In February 2022, the world watched in shock as Russian forces crossed the border into Ukraine, launching a full-scale invasion of its sovereign neighbor. This act of aggression was met with swift and severe condemnation from the international community. The United States, the European Union and their allies responded with unprecedented economic sanctions against Russia. These sanctions were designed to cripple the Russian economy, isolate it from the global financial system, and pressure the Kremlin to end the war. The sanctions imposed on Russia were wide-ranging and targeted key sectors of its economy. Hundreds of billions of dollars in Russian assets were frozen in foreign banks, effectively cutting off access to vital funds. Trade with Russia was severely disrupted, with many Western companies pulling out of the country altogether. The once booming Russian stock market plummeted, wiping out billions in value. These measures sent shockwaves through the Russian economy, ushering in a period of deep uncertainty and instability. The impact of these sanctions was felt almost immediately. The value of the Russian ruble plunged, losing more than half its value against the US dollar at one point. This sharp decline made imports significantly more expensive, fueling inflation and pushing up the cost of living for ordinary Russians. For the average Russian citizen, the economic fallout of the sanctions was impossible to ignore. Inflation soared to levels not seen in decades, eroding the purchasing power of their savings and salaries. Supermarkets faced shortages of essential goods as imports dwindled and supply chains were disrupted. Long queues became a common sight as people scrambled to buy whatever they could find, often at inflated prices. The economic hardship fueled a sense of anxiety and uncertainty among the Russian population. The once promised prosperity of the Putin era seemed increasingly distant as the economy contracted and living standards declined. While the Kremlin attempted to downplay the impact of the sanctions, the reality on the ground was far different. Section 4. Seeking lifelines. Russia's pivot to new trading partners. Faced with mounting economic pressure, Russia sought to mitigate the impact of Western sanctions by forging closer economic ties with other countries, particularly China. Trade between the two countries surged as Russia looked for alternative markets for its energy exports and sources of essential imports. China, eager to reduce its reliance on the West and strengthen its global influence, proved a willing partner. However, this pivot to the East was not without its challenges. China, while a major economic power, could not fully replace the West as a trading partner. Russia still faced technological limitations, difficulty accessing certain goods, and the risk of becoming overly reliant on a single trading partner. Section 5. The Trump card uncertainty looms over the future of sanctions. The potential return of Donald Trump to the White House in 2024 has cast a long shadow over the future of sanctions against Russia. Trump, known for his unconventional foreign policy views and his seemingly amicable relationship with Vladimir Putin, has repeatedly hinted at easing or even lifting sanctions on Russia if he were to be re-elected. This stance has raised concerns among Ukraine's allies who fear that such a move would embolden Putin and undermine the West's leverage over Russia. The re-election of Donald Trump could have significant implications for the ongoing conflict in Ukraine and the future of global geopolitics. Whether he would follow through on his campaign rhetoric and ease sanctions remains to be seen. However, the possibility of a major shift in U.S. policy towards Russia has injected a new element of uncertainty into an already volatile situation. The world watches and waits, the stakes higher than ever,